Is it actually a bubble? This is the question that many people are asking these days, and we cannot blame them. Every time the company does something unimaginable, skepticism seems to arise. But while all the answers to this question were just opinions of some people, today it finally changes. Today, we finally have something to touch on from a Palantir employee. This is breaking news, and a very important video for anyone. So, without further ado, let's get straight to the point. Disclaimer. Today began with exciting news from Palantir, especially in their healthcare sector. At AIPCon 5, Jeremy David, co-head of healthcare at Palantir, spoke about the increasing role of AI in hospital operations and patient care. He mentioned some of the key work Palantir has been doing, like determining if patients qualify for hospital-at-home programs at Mount Sinai in New York, or their efforts in tackling sepsis with organizations like TGH Cares. What stood out from his talk is how Palantir's AI technology is being used to understand complex healthcare rules and apply them to real-world patient data. Essentially, they're using AI to analyze unstructured and semi-structured patient information, things like doctor's notes or lab results, to determine if a patient fits a certain treatment or care program. This update is significant for Palantir because it showcases how their technology can handle large-scale, complicated data in a critical field like healthcare. By improving hospital efficiency and patient care, Palantir is positioning itself as an essential partner for hospitals and health systems. The more they can demonstrate success in these areas, the more likely they are to grow within the healthcare industry, gaining both trust and new clients. This kind of progress really strengthens their presence in a market that's always looking for ways to improve patient outcomes with cutting-edge solutions. But what's really catching attention right now is a new trend popping up on Twitter. There's been a lot of talk on financial Twitter about Palantir being in a bubble. Some people believe the company's valuation is overinflated. For over a week, Palantir's stock has been holding strong at around $40, giving it a market cap between $85 to $95 billion. That kind of rise has made some skeptical. When a company's stock price skyrockets quickly, without everyone fully understanding why, people start calling it a bubble. It's a common reaction. If you can't explain to someone in simple terms, like to a 5-year-old, why a company is valuable, it raises doubts. When that happens, rumors of a bubble start circulating. But not everyone is buying into the bubble theory. One Twitter user summed it up perfectly. My 2 cents. The valuation can be stretched, and we could see a pullback, but calling it a bubble is laughable. This person went on to break down their thoughts even more, saying, I classify a bubble popping as a 50% drop from the stock's peak. Anything less than that is just a pullback. So if Palantir hit $44 and then dropped to $35, that's a 25% pullback. It would sting, sure, but that doesn't scream bubble to me. To actually consider it a bubble, the stock would need to drop to around $29. And they pointed out that for Palantir to fall that much, it would likely be due to poor earnings or larger economic issues that affect all stocks. In other words, if Palantir's rise to more than $40 was just fueled by hype rather than solid fundamentals, that kind of drop could happen. Still, they admit they've felt for a while that Palantir's valuation is stretched, but they don't see it easily falling into the 20s anytime soon. But to really understand whether Palantir is in a bubble or not, it helps to hear from the people who are actually working inside the company. What Palantir's employees and leadership say gives us the best insight, because they know the internal workings, the challenges, and the vision better than anyone else. Recently, Palantir's CTO gave a speech addressing a key issue. He talked about something called the fiscal OODA loop, which is basically the company's ability to control and manage its cash flow. He said, you can't just cut out the bad outcomes without also losing some of the exceptional outcomes too. This suggests that Palantir's leadership understands the risks of playing it too safe. If they focus too much on avoiding mistakes, they might miss out on the big wins that make the company valuable. And when we think about the rumors of Palantir being in a bubble, this speech adds context. It shows that the company is aware of the balance they need to strike. They can't focus on short-term issues like stock dips without risking the longer-term gains that could justify their high valuation. So while the stock price might fluctuate, Palantir seems to be playing a long game. This could mean that what looks like a bubble to some is actually just a part of the natural ups and downs, as the company aims for those big, exceptional outcomes. So this helps answer why Palantir is growing so quickly compared to other companies. Palantir isn't just another software company. They're in a league of their own when it comes to annual contract value, which is the highest in the software industry by far. As the CTO says, Palantir sells outcomes, not products. They're not just providing tools for companies to use, they're delivering results. And that's what sets them apart. They're focused on helping organizations achieve real, measurable success, and that's why they've been able to scale so fast. What we also need to understand is that the top companies in Palantir's sector, and even some of the largest companies by market cap, are missing something crucial. And Palantir is definitely taking advantage of that. One Twitter user made an interesting point saying that if Steve Jobs were still around, he'd be incredibly bullish on Palantir. Why? Because Apple no longer innovates like it used to. Its superstar is gone. But look at Palantir with Thiel, Karp, and Sankar. Or Tesla with Elon Musk, and Nvidia with Jensen Huang. These companies are driven by visionary leaders, and that's what sets them apart. And this perspective makes a lot of sense. Innovation in tech doesn't just come from good products. It comes from leaders with a bold vision and the ability to push boundaries. When a company has someone at the helm who can see beyond the present and take risks, it drives real innovation. Palantir, like Tesla and Nvidia, is being led by individuals who are still pushing those boundaries, and that's why they're growing so fast while others might be losing steam. And when we dig deeper into the analysis, there's one undeniable fact. If you look at a table of S&P 500 companies sorted by the highest sales ratio, Palantir is right at the top with a massive 30x multiple. On top of that, Palantir also has the third strongest year-to-date performance, up 147%. These numbers show that Palantir isn't just another company. It's something much more. Palantir isn't just about software or services. It's a founder factory. It's a company built on a vision that goes beyond the usual, led by people who are shaping the future. The numbers back it up. Palantir is setting itself apart from the rest. And with all this context, the perspective of those super bullish on holding Palantir forever starts to make a lot more sense. One Twitter user put it passionately, saying, "Never sell Palantir. All these people selling or doing short calls, they don't get it, but we're all going to make it." Palantir is the kind of company you hold on to for life, and one day, you tell your grandkids about it. Palantir is the greatest of all time. This mindset taps into a truth about investing. The long term always wins. Companies with strong vision, innovation, and leadership tend to succeed over time. Palantir isn't just a short-term play. It's a company with the potential to keep growing and shaping industries for decades. Holding on to that kind of company is where the real value comes in. So, with all of this in mind, we can start to answer the big question. Is Palantir really in a bubble? Well, there's a strong case that it isn't. One Twitter user made a great comparison, bringing up the example of Apple back in the 80s. People kept saying Apple was too expensive every time it doubled in price, from 22 cents to over $1, then $5, and so on. And every time, those who doubted missed out as it kept climbing. The same story played out with Tesla. People thought it was too late to invest at $5, then at $50, then $100. And now, we all know how that turned out. The lesson here is that people often say a stock is too expensive based on its past, not realizing how much more potential it still has. As the tweet pointed out, Peter Lynch famously said, "More money is lost waiting for the perfect correction than during the corrections themselves." And that's what might be happening with Palantir. Sure, it might dip again, maybe even back to $20, but long-term investors see the bigger picture. 10 or 15 years down the road, Palantir could be a completely different beast. So, is Palantir in a bubble? When you look at its vision, leadership, and potential, it really looks like this company is still just getting started. Not financial advice, but it's never too late if you believe in where it's headed. But what do you think about this? Let us hear your thoughts in the comments. If you are curious to find more, then make sure to click on one of the videos you see on the screen. And with that, we come to the end of this video. If you enjoyed the video, then turn on the notifications bell on this channel. Missing an important Palantir update might make you lose money. So, don't risk it. Also, please share this video with as many people as possible. Let's get this news out there.